Good morning, my name is Carl Williamson. I'm speaking to you from our London offices. It's November 2022. I'm the manager of the Nexus Global Dynamic Portfolio and the Nexus Global Solutions Portfolio. The Nexus Global Solutions Portfolio is up 2.1% in October, while the Nexus Global Dynamic Portfolio is up 3.8%. Equity markets ended the month on a positive footing, with developed markets registering healthy returns, while emerging markets did lag, with Chinese equities falling during the month. In the UK, Rishi Sunak was appointed new Prime Minister, and Jeremy Hunt, the Chancellor, reversed a number of previous tax cuts that were announced and pledged a more fiscally responsible budget in mid-November. This meant for the month that gilts returned around 3%, benefiting the solutions portfolio, while globally bonds were down around 1%. Last Thursday, the Bank of England raised interest rates by 0.75%, matching identical increases from the Federal Reserve the day before and the ECB in October. Despite continued upside surprises in US inflation, the messaging after the Federal Reserve meeting was more balanced. The Fed altered its forward guidance to emphasise the amount of tightening done to date and the lag in monetary policy. At the press conference, Fed Chair Jerome Powell emphasised that they may slow the rate hikes as early as December, although he did emphasise that the terminal rate may be higher than currently anticipated. Flash PMI data in October continue to suggest a slowdown in many developed economies. While recession risks are clearly rising, we think there are a number of factors that may mitigate from a wider, deeper recession. In the US, the labour market remains strong and the housing market seems to pose less systematic risk than it did in the global financial crisis. In Europe, government support measures should help alleviate some of the pressure on disposable income caused by the energy crisis. It's been hard to find a silver lining in 2022 given the moves we've seen in various asset prices. But here's one. It's finally possible to earn an income from bonds. For years, those investors seeking an income have had to look towards equities given that central banks had kept interest rates so low. We are now seeing the demise of one of the catalysts for the bull market over the last 14 years, TINA. TINA stands for There Is No Alternative. For years, with interest rates at rock bottom, income investors have had to turn to the equity market. But now there is an alternative in bonds and other fixed interest assets. Investors have had to rethink the outlook for central banks and the risk premium applied to bonds in a world where the central banks will no longer backstop the market. However, after a fairly painful adjustment this year, we think the valuations for both bonds and equities are starting to look more attractive. It's been my pleasure to speak to you, and I look forward to speaking to you next month.